Nathan Dean, CITN, taxation faculty. You've heard it from the horse's mouth. He will be coming back because moderator is just to initiate the program. The chairman of session owns today's activity while I stay behind to just see how it rolls about. But before I give the floor to him to moderate the session, it gives me great honor to invite the 17th president of our great institute, Mr. Innocent Oagwa, FCTI, as he gives his opening remark for us to proceed straight into the session that will definitely be chaired by the coordinating director. My president, you have the floor, sir.
Good morning. Good morning, moderator. Good morning, distinguished ladies and gentlemen. Good morning, all. While I observe the protocol that has already been established, I would not want to take much of our time because our time is running. I want to greet my elders on this call, the past presidents, the council members, the discussants, and the presenter of this paper. The secretariat, all of you and members, I greet you all. Good morning once again. It is my pleasure to welcome us to the 5th edition of this series of enlightenment. The first of four series, the first of four series that have been held were at the proposal stage. This 5th to 14 is a
I think we're having a bit of connectivity issues from your end, Mr. President.
now. Then this will cover the general
I don't know if it is from our side here, the Dr. Abani, or from the secretariat.
It is from the secretariat where we can hear you loud and clear.
Okay.
We've lost the president's connection, please. If the technical team can please deal with this.
Hello.
Thank you.
Okay, we can hear you. Sir. We can hear you. Hello. Go ahead, sir.
I was saying that the series are up to 14 now, so we should not stop at this 5th. They are rolled out. Please, you are encouraged to participate so that at the end of the time, all of us. Hello.
We can hear you, but you're very low.
Am I being heard?
You are being heard better now.
Am I being heard?
You are being heard better now.
Hello. So I said this we still have up to 14th series, and we are encouraging members to ensure that they participate. We also encourage all professionals and non-professionals to participate in this free webinar. After September, then we'll go into the next this enlightenment, and that will attract discounted fees. So, distinguished gentlemen, I use this opportunity to thank you all of you. Thank you all and declare this series open. Thank you, and God bless you all.
Thank you very much, my president. Moderator? Olu, the moderator, can you hear us? Can you speak? Have we lost you too? Can anybody hear me? Okay, very good. In order
Thank you, sir.
Okay, thank you very much. Thank you very much, my president, for setting the scene and opening the event. Very much appreciated. All protocols have been established for today. May I now call on our lead presenter, Mr. Matthew Osaneku, who is the Director of Field Operations Monitoring Department of soon-to-be FIRS, soon-to-be NAS. He has been the Director of Field Operations Monitoring Department, which is a very critical role for the rollout of these rules. They will be putting in place all the processes and interfaces that the rest of us will be meeting. He's recognized for his leadership in the event, driving initiatives, strengthening revenue systems, and improving tax monitoring processes. So, Matthew, you have theoretically 40 minutes. We may reduce it very, very slightly, but if you can please make your presentation. I have had the privilege of seeing a preview, and it is awesome. Please, Matthew, can you go ahead? You're muted. Can you unmute? Technical, can you make sure? Matthew, can you hear? Okay, speak.
Yes, you just unmute me now. Yeah, can you hear me clearly?
Yes.
Yeah, the oath should also allow me to share my slide.
Technical, can you please give information? You should be able to. Is it allowing you?
Yes, now, yeah.
All right. Thank you very much.
Can you see my slide?
It's coming up. Yep, we can see. Can you put it on full slide mode? Excellent. Fellow PCs, can you all see this?
Yeah. So, good morning, colleagues, professional colleagues, ladies and gentlemen. It's my pleasure to be here. And I'll be giving a very simple task this morning to deep dive into a discussion from reform to reality. Practical guidance for compliance with the new Nigerian tax law. You agree with me that has been a very interesting time for us in FRS and everyone on this journey into where we are today. You agree with me that a lot of effort to take us to where we are today. And we are glad that all the four tax bills have been passed and signed and assented to by Mr. President. I'll be going through my table of content, introduction, the essence and rationale of the acts. I'll be focusing majorly on two of those acts, the Nigerian Tax Act and the Nigerian Tax Administration Act. I'll be looking at some critical changes, the expectations from professional colleagues and benefits, and I will close my session. So, introduction. Dear colleagues, ladies and gentlemen, Mr. President, the President Bola Ahmed Tinubu signed the 4th tax bill into law on the 27th June 2025, and you agree with me that the act itself has comprehensively overhauled the Nigerian tax landscape. And this act will drive economic growth and will increase the revenue generation, improve business environment, and enhance effective tax administration across 3 levels of government. And we want to ensure that we are all set to implement. So we have the effective date for the act will be 1st January 2026. And we have the four acts. The first one is the Nigerian Tax Act. Then we have the Nigerian Tax Administration Act. We have the Nigerian Revenue Service Act. Then we have the Joint Tax Board Joint Revenue Board Act. Now, the essence of the act being signed, one of them is to harmonize our tax laws. You agree with me there is need for us to consolidate our tax laws to ensure that we eliminate all inconsistencies in the current legislation, and also to remove administrative burdens on taxpayers, and also to improve businesses. Also to entrench efficiency and modernization in our tax system, improving efficiency, collection and management for both the government and the taxpayer. The essence is also to simplify the tax laws in a simple language that will be understood by both taxpayers and all stakeholders, and also to improve coordination between FRS and the state service, state or tax authorities, and also to reduce all levels of redundancies in our tax system. The rationale also is to ensure that we standardize tax policies to enable better resource allocation so that we can reduce fiscal discipline and improve fiscal discipline, and also allowing for investment in key priority sectors. So there's need for direct investment into Nigeria. So this law itself is a way to ensure that we have foreign direct investment into Nigeria. And also to ensure transparency and integrity of our tax system so that it will be clear, accountable, and also to reduce reduction and also entrench trust among all stakeholders. And also to update the tax laws, because the current law as it is today is obsolete. So there's need for us to update the tax laws because of the rise in digital businesses and also emerging sectors. Dear colleagues, ladies and gentlemen, is also to ensure that we adopt global best practice to ensure that we align with good practice as been done internationally, and also to ensure that we broaden the tax base, increasing revenue for government, and also to reduce reliance on borrowings, and also to ensure that we improve domestic resource mobilization, to ensure that we look inwards and improve our revenue to fund government projects. So let me quickly look at the structures of the Nigerian Tax Administration Act and the Nigerian Tax Act. So I'm focusing on those two because the Act itself, the Nigerian Tax Act itself has about 9 chapters. So chapter 1 deals with objective and application. Chapter 2 talks about taxation of income of persons. Chapter 3 talks about income from petroleum operation. Chapter 4 talks about relief of double taxation. The 5 talks about taxation of digital instruments. The 6 talks about VAT, while Chapter 7 introduced to charge. Chapter 8 introduced tax incentives, and we have Chapter 9 that talks about general provisions. And we have about 203 sections in the Nigerian Tax Act. So with the little time allocated, we will not be able to deep dive into all the provisions, but we are highlighting some of the key provisions. And the Nigeria Tax Act has about 24 parts and about 14 schedules. So, but to just be highlighted, and the objective is to ensure that we have a unified fiscal legislation governing our tax system. You agree with me that the current tax legislation are fragmented and in silos. So the National Tax Act has now codified all those provisions into one statute. So that is the key objective of the Nigerian Tax Act. Now, for the Nigerian Tax Administration Act, it has 5 chapters. And chapter 1 deals with objectives and application. Chapter 2 deals with returns, assessment, and payment. Chapter 3 relates to general administrative provisions. Chapter 4 relates to offenses and penalties. While chapter 5, dear colleagues, leads to miscellaneous provisions. And it also has 148 sections, 8 parts, 5 schedules. So we see time enough permit us to actually, roll out all the new provisions, but we'll be highlighting key of those provisions that were introduced. And the essence of the Nigerian Tax Act is to provide a uniform procedure for consistent and efficient administration of our tax laws to ensure that if as a state, taxpayers compliance, and also to ensure that taxpayers understood the provisions of the law. So let's quickly dive into some of the key changes in the Nigerian Tax Act because of the little time allocated. So let's look at a few changes. Let me look at the summary of changes. Now, the current tax law has fragmented provisions. So the Nigerian Tax Act itself are considered multiple taxes and into one unified structure and reducing fragmentation and duplication. And also the Nigerian Tax Act also simplify administrative processes, registration, filing, and all that. Then also, it also bring about unified filing system. Let me move on very fast. Now let's look at some of the repeal provisions. So we could see CGT have been repealed, Casino Act have been repealed, Comic-Con tax have been repealed, the Offshore and Inland Basin Act have been repealed, IDITRA, Industrial Development Income Tax, also been repealed, Personal Income Tax is no more, Petroleum Profit Tax is still subsisting for those that have not converted into the PIA regime. Stamp Duty Acts have been upgraded, have also been repealed. Tax and Levies Act has also been repealed. Value tax Cap 6 LFN 2024 has also been repealed. The venture capital provisions have also been repealed. So let's look at some of the amended laws. For the PIA, the taxing provision in Chapter 5, Part 1 to 10, and 5th Schedule, 7th and 6th schedules are also been deleted, have been inserted into the Nigerian Tax Act. The Export Opportunity Zone Act also been deleted. The oil Section 8 and Section 18 that talks about taxes of federal, state, and local government free from tax have also been deleted. And the provisions in NITDA, Section 12 and 2 and 16 and the third schedule that speaks to the taxing provision of NIDA 1% of profit before tax had also been deleted. For the Tertiary Education Trust Fund Establishment Act, was also amended by deleting Section 1, 2, and Section 3, Section 3. All the taxing provisions had also been deleted. So agree with me that in the TET Act, the current rate of 3% on taxable profit has also been deleted. The provision of NASEMI Act that requires 0.25% of profit before tax has also been deleted. The Custom Excise Act also deleted Section 21, Section 2, and we'll be talking about later. The Nigerian Tourism Act has also been deleted. The gaming and lottery business have also been included in the Nigerian Tax Act. The Nigerian Tax Startup Bill has Section 25, 2, and 3, all the taxing provisions has also been inserted. So let me just go straight because of time to the key changes. Now, the Nigerian Tax Act is well structured, and we have taxation of persons, corporates, and we have the resident companies, the non-resident companies, and also we have the natural persons, individuals, and non-resident, resident and non-resident individuals, the family and community. Also, we have trustees, administrators, executors, and other, and also a specialized provision for income from petroleum operations. All of them have been included in the Nigerian Tax Act. So let me just quickly begin to look at a few practical changes. Chapter 2 of Part 1, as the expansion of income tax provisions has been expanded. Income tax, profit, and gains on chargeable tax have been expanded. Currently, what we have in Chapter 9, in Section 9 of the company income tax, have been expanded to include discount and rebates, disposal of money and money instruments, income, profit, and gains for disposal of lending of securities have been included in the Nigerian Tax Act. Prizes, winnings, honorarium, grants, award, and laurel are now chargeable income. So profit or gain from transactions in digital and virtual assets, cryptocurrency, Bitcoin, and all that are now chargeable to tax. And the implication is that to ensure fairness and to capture all the growing digital economy, to ensure that we prevent abuse and ensure we reduce losses and improve taxable income. So let's move to the next item that was also introduced, taxation of individuals and employment income. Now, income gains or profits of resident individuals are now chargeable in Nigeria wherever they arise. So where a resident of Nigeria earn income in Nigeria and abroad, so whether you have brought that income into Nigeria or received in Nigeria, all worldwide income is taxable in Nigeria. So if you have an income abroad and have not brought that income to Nigeria, and through exchange of information that income is known to the tax authority, all the worldwide income is now fully taxed in Nigeria. So the issue of brought in or received in Nigeria has been removed from the Act. So also reduction of the scope of employment income for non-resident taxable Nigerians for those, and also limited, restriction to startup and shared service and technology-driven services. That is to ensure that we standardize and limit deductions to ensure fairness of employment taxation in Nigeria. So another introduction was the emolument of a Nigeria unemployment performed for a foreign country or international organization that is subject to tax in another country under an agreement or diplomatic arrangement to which Nigeria is a party. All Nigerians working in international organizations where tax has not been paid in other country will be subject to tax in Nigeria. Also, there's introduction of expansion of individual deductions. There's new introduction by also introducing some new eligible deductions. What we have currently in the 6th schedule of PITA, we have the National Housing Fund, National Health Insurance Fund, life insurance, pension. So they now also introduce some other eligible deductions. Interest on loan for developing an owner-occupier residential house is now included, and also rent relief of 20% of annual rent paid, and which is subject to maximum of 500,000, and also be included. So we also have a new tax table for individuals. That tax table starts from the first 800,000. It starts at 0%. So those that earn income less than 800,000 are exempt from tax. So the next 2,200 is at 15%, next 9,000 at 18%, next 13 million, next 9 million at 18%, next 13 million at 21%, next 25 million at 23%, and net 50 million at 25%. Now, we look at chapter 2, part 2, reading from section 16, section 6 to 16, taxation of resident persons. Now, let me also restate that the income of profit of whether resident individual or company is deemed to be derived from Nigeria and chargeable to tax in Nigeria wherever the income is made, wherever they arise. So ditto for resident individuals, the same is applicable to companies. So the rule of brought in, before we have 4 major rules in Section 9 of the current CITN. We have the rule of derived from Nigeria, accrued in Nigeria, brought into Nigeria, and received in Nigeria. So the provisions of brought in and received in Nigeria have been removed. All right, so where income are derived from Nigeria, accrued in Nigeria, whether they are brought into Nigeria, they are taxable in Nigeria. Also, the tax eligibility rules has also been limited to wholly and exclusively rule. Before we have the REN rule, wholly, exclusively, reasonably, and necessarily, incurred rule. But the issue of resibility and necessary rules have been deleted. So we have the issue of wholly and exclusively rules, and this is to reduce subjectivity and disputes in deduction, so that we will apply clear and more objective standard. So let me quickly also mention the new insertion into the Nigerian Tax Act. So any expense on fixed asset on which VAT or duty is due but not paid is not deductible. When you have incurred qualifying capital expenditure of fixed asset and duty is not paid on it or VAT is not paid, the expense related to it is not deductible. The VAT Act currently only restrict input tax on purchases and imported goods and services, so imported goods, where services and fixed assets are not liable. But now any expense of fixed asset on which VAT or duty is due but not paid will not be a liable deduction or not qualify for QC. Also, the capital allowance rules has also been overhauled. So we have new QC now added. We have qualified expenditure, heavy transportation to include engines of airlines, so aircraft and trains are also be included. Marks, qualified expenditure, asset qualified expenditure, software qualified expenditure, mining, and all that have been included. And we have rates ranging from 10%, 20%, and 25%. So all this is to simplify composition of capital allowance so that we can ensure that we have a good practice. Let me move to the next changes. We also have the new introduction also include the rule they called controlled foreign corporation rules in Nigeria are now subject to tax. So for instance, when you have a Nigerian parent company having a subsidiary outside, for instance, we have a Nigerian company like Dangote, and he has a subsidiary in Ghana, and that subsidiary has profit and has not distributed that profit. So that profit can be deemed distributed and be included into the income to be taxed in Nigeria. And also we have introduction of a 50% effective tax rate on the net profit. So where the tax paid is less than 15% effective tax rate, there is a new introduction in line with the global minimum tax rules, what we call the top-up rules. So where the tax paid is less than the effective tax rate of 15%, there will be additional tax to ensure that you are equal to that 50% effective tax rate. And also, we have a new section in the Nigeria Tax Act. Expenses in foreign currency are now deductible only at the CBN official exchange rate. So when you have incurred foreign exchanges and it results into losses, and that exchange is from black market. So what will be used is only the official rate. So I mentioned earlier, gaming and lottery business is now introduced, and the CIT, the income tax rate is now classified into two. We have the small companies to tax at 0%, and we have large companies to be taxed at 30%. We have the new concept being introduced into the domestic law. The rule of permanent establishment was only inserted in tax treaties in avoidance of double taxation agreement, but it's now included in the domestic law to replace the concept of fixed base as enshrined in Section 13 of the current Common Income Tax Act. So the permanent establishment rule has been expanded. That the rule has been, the scope is now expanded. Also, there is inclusion of what we call the force of attraction. So when we have a permanent establishment and the non-resident is also transacting business outside the permanent establishment, the rule of force of attraction will also come into play, and the non-resident income will be income that is attributable to Nigeria will be subject to Nigerian tax. So the expense deductibility rule for permanent establishment of non-resident is tied to expenses actually incurred. So no notional expenses will be allowed going forward in the new act. So it now exclude imputed cost for both for royalties, interest of fees, and titular property. Now there's also a new rule on profit for non-resident, where the income for non-resident cannot be determined. There's a new rule that has also been introduced, and the limit is now 4%. Let me go straight to addition of SEP. The SEP rule, significant economic present, has also been introduced in the NTA, and just to ensure that all income for those that are non-resident that are earning income in Nigeria, and the income is more than 25 million, and the income attributable to Nigeria, they are now taxable in Nigeria. So the SEP rule is no longer necessary for transition of remote services. So where a non-resident provide furnished technical professional services to a Nigerian resident, rule is no longer the condition for the SEP rule in the new Nigerian Tax Act. The payment for foreign insurance company is now subject to tax, where a Nigerian resident insured in a foreign insurance company, that will be withholding tax. Withholding tax will now be applicable going forward in the new rule. So let's also quickly look at value tax because of time given to me. Value tax also has been overhauled. Input tax claim from output has also been broadened to include VAT incurred on services and fixed assets. In the current rule, is only limited to goods purchased or imported. Overheads, where the current rule are not allowable input, while fixed assets will be capitalized. But the new rule, VAT, that is VAT incurred on services and fixed assets, are now allowable input deduction. And there's a proviso that to ensure that the supplies are consumed in Nigeria, utilized in Nigeria, and for making such suitable supplies. And the implication to ensure we have neutrality and fairness in the tax system, so that businesses will be able to recover all the input tax they have incurred. So the reform process also have been overhauled. For VAT, refund requests will be made within 12 months, and the relevant tax authority has to refund within 30 days. The written list also has been expanded to include agriculture, medical, education, and others. And the existing list has also been expanded to include baby products, military equipment, lands, and others also will be included. To ensure that we eliminate the VAT element on goods and services consumed by low-income earners and the vulnerables. So where VAT on the registered goods are incurred, the taxpayer can come forward for refund. So that's what the new rule has brought in. And also we have a new sharing formula. The federal government takes 10%, the state takes 55%, and local government takes 35%. Now, also, the SEP account to be remitted on or before 14th is still there following month. Also, there is new inclusion, a fiscalization rule, fiscalization and e-invoicing system has been introduced in the Nigerian Tax Act for the purpose of VAT, and there's a stringent penalty, including blacklisting and prosecution, of false and fraudulent VAT refunds. Then also
Matthew, I think we've lost your audio. I think our lead presenter may be having some problems. Just give him a few minutes to log back in, if you don't mind. Shagun, could you please try and get hold of Matthew and understand his issues? I think we're having severe problems here. Let's just try and see if we can get him back to complete his presentation. Can you hear me? Yeah, excellent. Okay, thank you for letting me know you can hear me. As I said, we'll just give him a couple of moments. We will have the slides shared to all registered members in the normal way in which the CITN does its business. Let's just give a couple of minutes. Let me be certain before I'll go on to the discussants to discuss what they have heard so far and possibly any additional insights that they want to provide for this session. Let me just use this opportunity to introduce the discussants, first of all together, and then we will go into them one at a time. So our discussants is Temitope Samagbe, who is a tax partner at Ernst & Young. Prior to that, he was associate director at KPMG, over 24 years of experience. And he has a lot of experience across international tax transfer pricing. And as we know, this law has pulled everything up in the air. So he also contributes insights and has been involved in contributing insights as these tax laws have been developed, and a very active member of the CITN. Alhaji Aziz Alatoye is very well known to us, managing partner of Ascension Consulting Services. He's also the Dean of the Extractive Industries faculty, and he is recognized for his in-depth understanding of Nigerian regulations and legislation. He has been a key part as we've been running this. In fact, for CITN, he chaired our interface with the Taiwo committee. So he will give us a lot of insights on the legal aspects. Dr. Kennedy Iwundu is actually now an associate professor Dr. Kennedy, congratulations. Of Forensic Accounting and Fraud Management in ICT University of Cameroon, and Managing Partner Accounting Tools Consulting Services Limited, and numerous other things which I'm not going to go into. He's everywhere. One-time chair of Abuja District and Society, and a very active member. In fact, I think some of us were watching him on TV yesterday as he was answering questions. Aha, Matthew is back. Let's see if we're able to. So I will not go back and reintroduce the discussants. I will merely ask them to come in. Matthew, welcome back. Can you speak? Because we can't hear yet.
Can you hear me, sir?
Now we can hear you. You have about 5 minutes to round up, if you don't mind, please.
Yes,
Thank you very much.
Let me quickly go straight to the next slide. Stamp duty also have been revamped in the new Nigerian Tax Act. There's a new overhaul of the stamp duties. The current stamp duties act have been outdated since 1939. So we have the new, brand new stamp duties rules and the provisions. So we have, and the duty to stamp and pay is now within 30 days. That's a new insertion. And the duty not stamped is no longer admissible in the court of competent jurisdiction. So we have interesting provisions there. And also another interesting thing about the stamp duty is that the provisions also included responsibility to stamp dutiable instrument has now been clearly spelled out in the current provisions. Let me quickly run through. Then there's a new introduction in Chapter 7 of the Nigerian Tax Act. It's called surcharge. The act introduced 5% surcharge on chargeable fossil fuel product produced in Nigeria and provided in Nigeria, may be imported in Nigeria, and it's calculated on the retail price and the collected money, and it's collected on a monthly basis by the Nigerian Revenue Service at the point of transaction. At the point of transaction, so where the exemption, clean and renewable energy is exempted, kerosene is exempted, LPG and CNG are exempted. So another interesting thing about Nigerian Tax Act is the introduction of the entrepreneurial levy at 4% of accessible profit. So this has eliminated the issue of multitude of taxes, all these amount taxes, TET, NIDA, NASENI, police fund have been consolidated, have been into development levy of 4% to be taxed, on accessible profit. So it means what we're having is the corporate tax and also the development levy at 40%, at 4% of accessible profit. Let me run through other details. So also have some income tax exemption. We have with the exemption regime have been fully consolidated in the Nigerian Tax Act. So like I said, I'm going to be sharing the slides. Small companies has also been, the turnover threshold also been increased to 50 million with a caveat that the total asset should not exceed 250 million. So let me quickly run through. So the issue of income tax levy has been taken out. We have a new
Matthew. Don't rush too much. Matthew, don't rush too much. We're extending your time by 10 minutes because this is critical. Okay.
All right. Okay. I'm trying to make sure that time up the time. So another interesting insertion is the industrial development income tax will have now been changed to economic development tax incentive. And one of the key major changes is that the pioneer industries or products are now changed to priority sectors. And these sectors are now, have sunset clause. So then also have what they call the qualified capital expenditure value attached to all those key sectors. And another thing that was also introduced is that the Economic Development Incentive Certificate is for 5 years and may be renewed for another 5 years, subject to 100% reinvestment of the profits back to Nigeria. And the rule also ensure that you provide separate accounts, both for priority and non-priority business and priority products. So economic development tax incentive credit to be utilized within 5 years. So within the period, within the priority period, between the economic development tax incentive period, the tax will be computed, and those tax will be, set aside as credit and will be utilized within 5 years, even after the priority period. That's a new insertion into the law. So let me quickly run through. Also, we have some new insertion. Also, advanced ruling also has been introduced to ensure to provide clarity, consistency, and certainty in the tax system. We also have a new one called the Virtual Asset Service Provider, have also been inserted into the Nigerian Tax Administration Act. Exchange of information on joint audit has also been inserted to ensure all taxable transactions carried out in various state service are taxed through information sharing. The offense and penalties regime have been also fully overhauled. Because of time, I may not be able to mention. I can just mention a few of them, like the failure to register has been increased from 50 to 50 million, to 50,000 in the first month of failure, and 25,000 in subsequent months. And where a statutory body or company who award the contract to unregistered person, a penalty of 5 million is now imposed. Failure to file returns is now increased to 100,000 in the first month of failure and 50,000 for subsequent months. And we have several penalties in the Nigerian Tax Administration Act. And another one I want to mention is the 10 million penalties for surcharge, where you fail to impose surcharge, and also 10% penalty at interest at CBN monetary policy rate. And also the penalties in PIA and PPA, PPTA, and Deep Offshore Inland Basin Act has also been consolidated. All this to ensure you have streamlined all our penalties regime. Then tax planning provisions have also been inserted to ensure that we have all financial arrangement as positions are fully disclosed to prevent companies taking financial advantage. So let me quickly mention the issue of returns in the Nigerian Tax Administration Act. Now, the returns has now been segmented into about 3 layers. So we have some returns that will be provided annually, and some provided monthly. For instance, we have the income tax returns for corporate tax. The resident and non-resident will also provide. We also ensure that they render returns. Individuals are also to render their returns annually. Then also companies in the upstream petroleum operations also file their returns annually. Then the annual returns of petroleum royalty is also inserted. So those ones are highlighted. New insertion, petroleum royalty from petroleum operations will be also be filing every month. Returns for virtual assets monthly. Also, we also have those that have been priority companies are also to file annual returns. Then also those are enjoying tax incentives also to file annual returns. So we have those that will be filing estimated returns. The new insertion is the estimated returns from liquefied natural gas, and that will be filed no later than 2 months after the commencement of the accounting period. So ditto for the returns for companies in the upstream or petroleum operations. Then we have the monthly returns for petroleum royalty, monthly returns for minerals royalty, monthly returns for non-resident on shipping and airlines, monthly returns for value tax, monthly return for surcharge. Those are the new returns, just to alert all taxpayers and tax practitioners that our clients need to be guided to ensure that they comply with the new provisions in line with the Nigerian Tax Administration Act. So let me quickly close. Now, what are we expecting from taxpayers? Taxpayers are to familiarize themselves, study the new tax laws to ensure they identify all the new areas, like I said, because we have over 203 provisions, about 9 chapters, 14 schedules. So there's need to familiarize themselves with all the new provisions to ensure that they study it, document all the necessary changes, and fully prepare for the implementation that will take effect from 1st January 2026. Also, our taxpayers are to ensure that they plan, they restructure their business operations, their accounting systems, and to ensure that they begin put in place strategies for full implementations of the new tax laws. Our taxpayers are also to ensure that they adjust all their reporting applications to accommodate the provisions of the new tax laws. So taxpayers need to also do that. So what is for consultant and tax practitioners? So education, very key to ensure they acquaint themselves with the new tax laws through various channels like the current webinar we are having, training to ensure 100% adoption, because we have a new stringent penalty regime. So taxpayers need to be guided. Therefore, every tax practitioner, tax consultant to ensure that they work with the relevant tax authorities to ensure that all that need to be updated in the new tax laws are updated. Also, they need to support their clients for adoption. They need to assist their clients, sit with their clients to ensure they look at their business process, look at their business model, and begin to develop strategies to ensure that they are in line with the current provisions of the new law. Then, tax consultants and tax practitioners to ensure that their clients meet with their obligation, including filing, to ensure that they file their taxes correctly within the stipulated timelines to avoid imposition of those stringent penalties and interests that are outlined. So I'll also be sharing a schedule, maybe after this slide, a schedule of the summary of some of the new offenses and penalties in this regime to ensure that our tax consultant and our tax practitioners explain and support their clients in improving tax compliance. Then we're expecting for tax authorities will continue to educate. We continue to roll out sensitive programs to all taxpayers and tax practitioners doing various platforms. Currently, FRS is working very hard. We are designing forms, and the guidelines is being prepared, is being developed. Regulations and circulars are being developed, and very soon we'll be rolling them out in phases so that they can provide clarifications on gray areas to ensure a seamless adoption of the new tax laws. So very soon we'll be seeing information circulars and guidelines from FRS, and those regulations that requires FRS to develop. We are working very hard to ensure that we develop those regulations. And what is the next thing we need to do? We need to ensure that we implement the new tax law through a comprehensive transition roadmap. As I speak to you, we have a comprehensive transition roadmap that is being developed in the system in-house, and we are committed to ensure that we implement all the provisions of the 4 new acts: the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue, Joint Tax Revenue Boards, and the Nigerian Revenue Service Act. So all these ones, we're ensuring that also investing in technology to ensure a seamless transition into the new act. And I also want to state there will be some transition provisions when we roll out all the circulars to ensure a seamless transition from the current tax provisions to the new tax provisions. Then our job is also to ensure that we monitor and apply the law fairly and firmly to ensure seamless transition. And where necessary, where we have recalcitrant taxpayers, FRS still have enforcement powers, still have investigation powers, still have audit powers. So when necessary, FRS will enforce compliance. So, dear colleagues, what are the benefits? Benefit of all these to enhance tax efficiency, to improve compliance, so that we can simplify our administrative processes and so that we clear understanding of the rules and procedures, and also to strengthen the new Joint Revenue Board, and a new office are also being created that is called the Tax Ombudsman, so that the rights of taxpayers, the rights of tax practitioners are strengthened to ensure more effective and transparent tax administration, both at the federal, state, and local government levels. And above all, to stimulate, stimulate economic development. So where everyone is on board, to stimulate key economic sectors, this will foster economic growth, it will foster prosperity for everyone. So on this note, colleagues, ladies and gentlemen, the three members of this Noble Institute, I want to urge you to be frontline advocates of the new Nigerian tax landscape. I'm certain that your contribution towards seamless implementation will stimulate economic growth, improve tax compliance, and ultimately increase tax revenue towards a shared prosperity for Nigerians. So, like I said earlier, some of the slides we shared, and some of the slides that were not part of this will also be shared. The slides that contains offense and penalties, the slides that we have several slides that will also be shared, so that we begin to acquaint ourselves with the new provisions. On this note, dear colleagues, ladies and gentlemen, thank you for listening to me. God bless you all.
Thank you very, very much, Matthew. I'm sure if we were all in the same room, we would all be giving you a thunderous ovation. In fact, we would also be looking to put you in as an associate professor or somewhere or the other. So thank you very much for running through this and remarkably keeping to time. PCs, you have seen the presentation. For those of you who are in good standing, you will get copies shared to you, another incentive for you to be of good standing. As I had introduced during the space when we lost Matthew briefly, we have three discussants, Temitope, Alhaji Aziz, and Professor Kennedy, who will be speaking. I will be asking Temitope, you have 10 minutes each to make your contributions on the presentation that's been made. As a prompt, we have had one question so far who is asking about the small business exemption threshold at 50 million. So already people are engaging and looking at their own interest levels. But and if there are any other questions, put them in the chat so that we can see about them. So Temitope, if you can please, but with more of a focus around companies and of course, all your own views on it as well. 10 minutes, sir. Thank you.
Okay, thank you very much. The president of the Chartered Institute of Taxation of Nigeria, Mr. Innocent Ohagwa, and the chairman of the session, Dr. Mark Abani, please permit me to stand on the existing and already established protocol. I will start by saying, yes, the presentation is well taken. There are so many clear and glittering areas. But when we talk about reform, what are reforms generally? Reforms are changes made to processes and systems or something with a view to improving it. Of a truth, I've seen one or two potential improvements in what has been signed by the President of the Federal Republic of and I think in one way or the other, the speaker, Matthew, actually did commented about some of them. But when laws are changed, it is important for taxpayers to be very, very quick. And when I say taxpayers, I mean companies engaged in taxable operations. Now, it is no news that the tax consultants, the tax play in this new set of legislation. Matthew, the speaker, alluded to certain things around the core principles of taxation. And I think that was last slides, when he was talking about fairness, he was talking about the economic relevance, as in for this to be of solid advantage to each and every one of us. Starting from the equities point of view, are these particular rules fair? Certainties principle, are we able to predictably align, and are they very stable? So I remember during the 26th annual convention of the Chartered Institute of Taxation, I did commented about certain that particular stuff coming up here now. The tax system appears to be improving in the area of efficiency. Whether right or wrong, the law is the law. So for someone that is a tax professional, a consultant, a tax administrator, and a taxpayer, for all these sets of people, look, we all need to be in the room developing and training. Although the speaker actually said, oh, taxpayers should familiarize themselves with the tax laws. For me, it is not limited to taxpayers. Taxpayers, tax consultants, and the regulators especially should pay more this part of the law, because at the end of the day, they are the ones, and aware that there is now a provision for advanced ruling. Now, advanced ruling is not going to, where there is any inconsistency in whatever ruling that may have been given. We all know that the law remains the law. Now, the Act essentially, I believe, covers the self-assessment, administrative assessment, tax filing, objections, final assessment, and what to do or what is to be done as will be necessary. But the key thing for taxpayers, for me, is to note those things that he has talked about. If compliance is not very important, because the whole essence of this particular setting is to talk about compliance. I am not going to be talking about those things that Matthew has said with respect to the respective sections and on like that. There are good things there, okay? There are good things there, but I will be pleading with the regulatory authority, the Federal Inland Revenue Service, and the state boards of internal revenue to come to speed, not as like the headmaster or the head teacher. We have to work together to have a seamless transition during this period, because we are in this particular business together. Right. Some fantastic ideas that came out of the newly introduced tax laws. Time will not permit us to say so much about them, but you see, the rescoping of VAT will help. So with respect to all the zero-rated and exempt items, companies should sit down and plan. Now, some may think that 6 months is far away. My advice to taxpayers is that 6 months is just by the corner. So you need to plan. Who are those that are to plan? As tax consultants, as tax managers, tax associates, tax directors, it is your responsibility to plan and plan well. So being in this room today is part of the planning. So you must have picked one or two things, and the speaker talked about exchange of information. Look, there is nowhere to hide again. Okay, there is definitely nowhere to hide again. Everything is now in the open. Okay, companies should come forth, okay, and do something. So I can, as I'm talking, I'm also reading. Someone said 6 months is too short. Yes, I can see that. But the fact is, remember I said it is what it is. So within the time slot, I think we can work out something. You can work out something within your organization. Now, are there provisions for transition or grandfathering? One thing that I did not say, and if you look at that thing called moratorium and what have you before, I didn't see so much of it in this particular act, because I may have signed a withholding tax exemption, you know, based on moratorium, based on grace period, some maybe 2-3 years ago. will that still be in effect today? That is something that we should talk about. And for any company, so many people have assumed that the year end of most companies actually is 31st of December. Okay, so for those, at least for the first year of implementation, if your year end is say February next year, March, April, May, June, okay, you may have to run 2 regimes. And that is why planning is key. Remember, this new law touches on the fact that even requests for them or not, you have to proactively open up. Okay, you have to proactively disclose those things. Penalty and interest is very key to what we're talking about. And look, the money is not enough. And what we're saying is that a whole chapter 4 of the NTAA has been dedicated to penalties, okay, only, which shows that this organization, the Federal Inland Revenue Service currently, is interested in pushing compliance and changing certain behaviors with a view to deterring tax evasion. So penalties and interest are key. Even shareholders will be looking forward to saying, look, we don't want to pay anything like that because we don't even have anything or so much in our coffers, with a view to ensuring we have a lot. In terms of efficiency and simplicity, in terms of updates to the laws, in terms of harmonization and uniformity, I would say this set of laws appears to be a great departure from what we used to have those days. Okay, for those that are doing, yes, for those in merger acquisition, and so there are things for them in this particular act, because those days I remember going to the Federal Revenue Service to saying, look, I have unrelieved loss, I have unutilized withholding taxes, I have unutilized capital allowances. With this new act, it is clear the surviving entity will be able to take advantage of that. We have so much embedded in the Nigerian Tax Act and the Nigerian Tax Administration Act and the 2 other acts. So for us, my advice is that we should kind of focus on ensuring that this is more like a sprint, not a marathon. We need to get there early. We need to ensure we imbibe and kind of ensure conformity with effect from 1st of January. While it may be very difficult for some entities, while it may cost some monies, the earlier you start, the better. Thank you very much.
Thank you very much, Timitope, for that excellent exposition. One of the key phrases that has struck me is we need to have a mentor rather than a headmaster-pupil relationship between the tax authorities and the rest of the world. And coming out very clearly is now is the time to plan. You may have to run 2 regimes if you straddle the year end. And very importantly, there is no way to hide, nowhere to hide. I won't add any more there. We have a number of questions that my colleagues will also be seeing in the chat room they may want to pick up. May I now invite Alhaji Aziz to please, for 10 minutes, give his own view. He may want to talk about some of the extraction matters as well as some other issues, being a legal luminary as well. So some questions about the interaction with the Constitution. But may I also say that this is one of a series of sessions. And so the answers to some of these questions will come up when we go into those detailed sections and detailed groups. So it behooves you to remain focused for the entire period and to pay up your dues so that you have access to the materials. Alhaji Aziz, over to you, sir.
All right. Thank you very much, Mr. Chairman, Dr. Mark Abani. And let me also join others to recognize our president, the 17th president of the Institute. I also do recognize the presenter and my co-discussants. The topic, as we know, is from reform to reality. Practical guidance, for compliance with the Nigerian new tax acts. This act, in my view, the implementation of that act started the day we had that the president had signed it into law. And we have these draft copies just to buttress the fact that that 6 months, even though to a larger number of people could have been more, is already effective right now. And we need to advise taxpayers to start looking into restructuring their ICT system, to support the new act. Let me recognize the effort of the Presidential Committee on Fiscal and Tax Reform for this great job. Just to recap some of the things that Matt said, unification of the legislation is a fantastic one, from piecemeal of the act here. You take one document, you are able to see what the Nigerian tax law is talking about with respect to assessment and collection and accounting for taxes, as well as the bodies that are going to be administering them, as well as the administration procedure. So this is a very good one. Harmonization of the taxes and elimination of the multiplicity of taxes. It's also a great thing that they've done, reducing the 62, taxes or more to a digit tax level, like the development levy, putting together quite a number of earmark taxes. This is a very great thing which has been done. Of course, they've simplified, the system now, which is going to be backed up by ICT, and I think it's going to be much easier for people to file returns wherever we are. Also, unifying the tax procedure is fantastic in this process. Having said all this, let me say that it's not as rosy as we might be looking at it on the surface for now, because we are in the transition period between the 27th of June there to the 31st of December, when everybody will be setting the system. By the time you are setting those systems is when you now beginning to see a number of challenges. So I agree with Matt significantly on a lot of the things, because it's just for us to be aware of what we need to do. There are some challenges that we need to start taking, the snags now in the process of the implementation, because as it is said that angel is in the details. I don't want to say that devil is in the details, because we don't deal with devil. We believe this is a good act anyway. So now we will be going into the details of this act, and a number of things which he raised. I'm going to comment on just few of them because of the limited time. One of the things is coordination and consistency, across authorities. Will this act eliminate somebody, let's say, residing in Ogun State and working in Lagos State, or residing in River State and working, in Bayelsa State? How do we still practically administer their tax? We can say the law is clear, the place of residence, but we know this issue, despite the clarity in the old law as to the place of residence, there are a number of cases, in court. So we need to start looking at how this law eliminates these disputes arising from coordination. The second one is the structured tax incentive. Before we call it pioneer, incentive, and now is economic development tax incentive. The question is, what has really changed? We have a very clear goal before in processing those incentives, which the law now emphasized. So the point is, what are we going to do differently? Those who are going to be claiming these economic development incentives must be very clear, and then we must monitor, review the performance, monitor it, and let the operators know the consequence of what is in there. I also want us to look at the situation of the special economic zones, by the deletion of Section 8 and Section 18 of the NEPSA Act and the Oil and Gas Free Zone Act. What's going to be their position right now? Because I remember in February when there was a seminar, you know, in respect of the application of this new Economic Stabilization Act or the Four Tax Act, as it affects them. A lot of them look very confused. You know, one is putting the plant in place, and on that day, the chairman of the Presidential Tax Committee was also there, and he mentioned that they've just invested about, you know, I think it's about 22, you know, million US dollars, and they were expecting that at least they will not be subjected to tax. But this is what is coming up. The presenter did mention ATR, you know, effective tax rate of 15%, which is not part of what actually they planned, you know, to do. How do we manage that? Those who are in the free zone that needs to pay certain levies in the zone, to the extent that those in the customs territory could then be better than those in the zone, so that we are not going to zero-rice the zone. You know, so we need to start looking at whether the government is then going to drop the charges, you know, at the zone, or how do we harmonize all those things. So because of time, I'm going to just want us to look into the expectation of the taxpayers, which you also mentioned, and the consultant. I will put the two together on what we need to jointly do, and that is familiarization with the act. It's good we all read this act very well with the aim of implementing it for a better compliance. And this is where we, you know, our consultant comes in. The chartered tax practitioners need to pay attention to tax education of the clients. We need to do a lot of summary for our clients, and we need to also do sessions and encourage people to join, you know, the CITN tax seminar. I know it's just like 1 hour or 2 hour max, including question and answer. So tax education is very important. Supporting our client at this point is very important. It's not about only reading the theory. It's very important that we assist to also implement, you know, the act as members of the institute. I must say on the final note that this is a great work time for our president, that is president of the institute, as well as all members of the institute, because I know we need a lot of education to do, you know, to both our members as well as the taxpayers, you know, of different sectors and different categories all over the country. So once again, I thank the institute for this opportunity to contribute. Thank you, Mr. Chairman.
Thank you very much, Alhaji Aziz. Eloquent as usual. There is more than just simply understanding the laws, as he's clearly pointed out. There's a restructuring of the ICT support facilities, support structures, both of companies and of various other people. The tax expenditure implications, tax expenditures are the incentive zones and how these will go forward. The position of special economic zones, and all of this sums up as education, education, education. I will keep on reminding us that this is reality. It doesn't matter whether we want to think about it or not. These are things that we're going to have to face. Just before I call on Professor Iwundu to make his own contribution, may a good question has come in, which I would ask all speakers to address in passing, but more especially our presenter as well, and that's to give us details where state internal revenue services need to quickly ramp up their activity and their own capacity towards implementation of the new Tax Act. There's a lot of that. We need to be careful we don't assume that state boards of internal revenue are aware of the impact of the changes or are running. So we need to make sure we leave nobody behind, state, federal, and individuals. And it goes right down to local governments. We need to make sure that the dream of this tax reforms actually crystallize. So feed that into your points, and when I come back for any additional questions. On that note, I will ask Dr. Kennedy Iwundu, Associate Professor, to give us his own view. And he may also want to talk a bit more about impacts on individuals and double taxation. By the way, all of your questions are being compiled. There are 11 sessions with details, and if we don't get your question today, it will be fed on to the other panelists who are coming forward so that they can incorporate the answers to those questions in their own presentations as they come along. Professor Iwundu.
Thank you very much. Dr. Bani, can you hear me?
I can hear you loud and clear. 10 minutes.
Yes. Good morning, professional colleagues. My greetings to our president, Mr. Innocent Onhagwa, the council members, my colleagues out there, all protocol duly observed. I don't want to go into the peripheral, superficial knowledge about the reforms. I want to go into the practicality of it. I'm teaching in the class, and I'm also in the field. So I want our colleagues who are in practice to look at on these areas I'm going to mention right now and note it down so that by next year, we'll be careful how we go about the implementation. One, on Company Income Tax Act. On company income, we should be aware that the chargeable gains are now included in the tax return. Formally or currently, if a company disposes an asset, we don't bring it into the income tax. What we do is to apply a capital gain tax rate on it. But in the new law is saying that that chargeable gain should be part of the income tax return, and will be charged at 30%. So I want practitioners to take note of that. Then number two, I also want practitioners to know that from next year, we are not going to have a minimum tax. Minimum tax has been eliminated with the new law. Currently, what we are doing is a minimum tax of 0.5% on the turnover, especially companies that have more than 25 million turnover and have operated for up to 4 years and above. So you must, but now in the new law, minimum tax has been eliminated. But that's going to be difficult for some of us, because I could remember whenever Federal Revenue Service writes a letter to my client raising additional tax, my response is Section 33 of CITN says minimum tax, and my client has paid the minimum tax. So I'm not agreeing to additional assessment. You can decide to audit the company or investigate the company, and if you have more taxes to get, you get it. So I have always relied on that minimum tax provision on Section 33 of CITN to defeat the FIRS. But now they have removed the minimum tax. I'm sure as we move forward to implement the law, I won't have any place to hide again. Because I know that the Nigerian Tax Administration Act, Section 36, gave the revenue authorities power to raise additional tax or additional assessment whenever we file returns. So I want practitioners to check out this area, that minimum tax has been eliminated. So when you file your returns, the revenue authority have right to raise additional assessment. And there's not like minimum tax where we rely again. So another one I want to talk about for the practitioners to be aware of is initial allowance has also been eliminated. Currently, if you in the capital expenditure, when granting capital allowance, we are allowed to have initial allowance and annual allowance. But in the new law, the initial allowance has been eliminated. Only straight line method will be applied at the appropriate rate. In the capital allowance rate they gave us, building and agricultural expenditure has 10%, plant and equipment has 20%, motor vehicles, softwares and other equipment has 25%. So what we are going to do moving forward from next year implementation is to ensure that we do what the law says. But I want to say the implication is that companies are going to pay more taxes, because by eliminating initial allowance means that the company will not have much relief they ought to have had when this initial allowance is in place. So I want practitioners to take note of these specific areas I'm mentioning. I also want to talk about VAT, input VAT on capital allowance expenditure. The new law is saying that on that capital allowance, VAT on it and import duties on it will not be eligible for us to compute capital allowance, because it has to be under input VAT. So these are areas I want to mention under company income tax. Then when we go to VAT, under the value-added tax, I'm so glad that the new law has removed self-charge, which is currently operating under Section 14, subsection 4 of Value-Added Tax Act. I have opposed that self-charge favorably, especially when I have issues with FIRS, because in my publication, which is online, I stated it categorically clear that self-charge is promoting double taxation. I'll give you an example how self-charge is promoting double taxation. If I deal with a taxpayer here and the taxpayer is in Lagos, I'm in Abuja, and FIRS audits me and say I didn't do self-charge, they will collect the VAT from me on the guise of self-charge. And over there, the customer I dealt with is in Lagos. FIRS also meet him in audit and collect VAT, the same VAT from him. So you can see how self-charge promotes double taxation. So I'm happy that our new law had eliminated this self-charge. FIRS can make regulation to ensure that the VAT on any transaction is being paid, not necessarily holding the two parties responsible for it. Then also happy under the VAT that there's expansion of, in terms of zero-rated items. Probably before now, these exempted items, when you suffer VAT on it, you can't recover their VAT in terms of input VAT. By expanding this list means that when you suffer VAT on these items, you cannot recover them. So Nigerians, tax practitioners should also know the difference between zero-rated items and exempted items. On exempted items, you cannot recover input VAT on exempted items, but in zero-rated items, you can recover input VAT. So I'm happy that the zero-rated items has been expanded and list was given to us. Also, the same VAT, input VAT claim on fixed asset. We are part of those who propose this. That if you go to OECD countries and others, when you purchase fixed assets, they allow you to use input VAT on those fixed assets as the input VAT you suffered in the fixed asset, use it to reduce your output VAT. But in Nigeria, they'll tell you, no, you can't use it. You can only capitalize the input VAT you have suffered in terms of capital expenditure. You should capitalize it. But I'm very glad now that when a company suffers input VAT on purchase of equipment or a fixed asset, the company can as well use that input VAT to offset the output VAT. I also want practitioners to pay note on the personal income tax, where consolidated relief has been eliminated or abrogated, and it was replaced with rent relief. People are arguing that consolidated relief gives them more. It gives them more. You know what? 20% of the total earning income plus 200,000. It gives you more reliefs compared to the rent relief that will not pass the threshold of 500,000. So there's an argument that the replacement is not in good time, but that is law. We have to obey the law. Maybe in the future, we can also look at it very well. I'm also happy on the area of double tax relief. In the double tax relief, if you suffer any tax on the outside the shore of the country, you can hear the revenue authority will consider it. Unlike before, they will tell you the country you suffer that tax don't have double tax agreement with Nigeria. But now, whether you have the country you suffer the tax has double tax agreement with Nigeria or not is irrelevant. Once you have suffered it and there's evidence that you have suffered that tax, you will be granted relief. And also on personal income tax, practitioners should also be aware that chargeable gains are not part of income tax to be taxed. I also want to take a look at the economic development incentive, which replaced the pioneer status incentive. The difference there is that currently we are having 3 years pioneer status and additional 18 months. But in the new law, the economic development incentive is giving us 5 good years, and it can be renewed for another 5 years. So that's a very wonderful one. So that's why I say I have to mention these areas so that we practitioners will always have misunderstanding with the revenue authorities. And the last one I want to mention here is on presumptive taxation. Presumptive taxation. Here it is stated clearly that when records are not kept to enable proper assessment, such a person shall be assessed by the conditions prescribed by the minister on the advice of the Joint Revenue Board. So let me repeat it again. Under the new law, presumptive taxation is saying when records are not properly kept for enable the tax authority to do proper assessment, that the person should be assessed on condition prescribed by the minister on the recommendation of the Joint Revenue Board. So we expect the Joint Revenue Board to quickly start meeting and come up with an advice to the minister so that next year we won't start having problem with them when a tax office will decide what is going to assess my client, and I'll ask him where is the condition given by the minister on the advice of the Joint Revenue Board. So we should take this serious and make sure that the tax authorities are operating within the ambit of the law. I'm happy that there is tax ombudsman, where there is tax complaint, where some of the aggrieved taxpayers can go to tax ombudsman and present their complaints, especially where they are aggrieved or where they feel their rights have been violated. So my take, my final take here is there should be need for practitioners and the tax administrators to jointly have a seminar or technical session so that all of us will be on one page on implementation of this law, so that when the implementation starts, we can be speaking on discordant tunes. Thank you very much, and God bless.
Thank you very much, Professor. Again, you're proving the professorship, but this is in actual practice. In fact, these are very key points that I'm sure professional colleagues will have picked up. We are running short of time, but I will go back and ask Matthew to please comment on the question about what states need to do to make sure that the SIRSs have a roadmap to be able to handle the new tax changes. And perhaps as part of that, you can also talk about any interactions the law makes clear around the VAT and consumption tax between some of the states. Matthew? Then I'll come back to
thank you very much, sir, for those questions. From one of the new acts that was signed by Mr. President is the Joint Revenue Board Act, which gave the Joint Tax Board more powers to coordinate and also oversee the administration of taxes within what they call the state service. So that's the new language now. You have the service, which is Nigerian Revenue Service, now what we call the state service, which speaks to the previous state Internal Revenue Service. And there is a provision in the Nigerian Tax Administration Act that talks about audit of information and also joint audits. So where we have a Nigerian resident in Ogun State and another Nigerian resident in Oyo State, both revenue authority can come under that umbrella of a joint audit. It's clearly stated in the provision in the Nigerian Tax Act that both revenue authorities, or what they call the state services, can jointly share information, jointly audit that company, and to ensure that the issue of multiplicity of taxes, multiplicity of visits to all those states are addressed. And then the issue of value-added tax, somebody have asked a question about in some of those charts, someone asked a question about the issue of VAT. For like the actual professor have said, for value-added tax on input, value-added tax on zerated, you can come and claim your input. But those that are under the umbrella of exemption cannot claim inputs. And you must apply and make the request within 90 days. Sorry, within 12 months. All right. Anything outside the 12 months will not qualify for refund. And the tax authority, for purpose of VAT, is obligated to ensure that they refund the VAT within 30 days. So what we are doing internally is to begin to upgrade our system and to upgrade and to begin to tweak our reform system to ensure that we align with the current provisions, current provisions of the law. So another thing I want to mention is that the new law has also brought some new concept of value tax. So where value tax, is due on fixed assets, and that fixed asset and that value tax has not been paid, the taxpayer cannot claim that fixed asset as a qualifying capital expenditure. Cannot. So there's some of the new provision that I can see from the new act. Then also for any expense where VAT is due and VAT is not paid, so that expense will not be liable for deduction. So now the input tax regime has been expanded. You can claim input on goods purchased and goods imported. You can claim input on overheads. You can claim input on fixed assets. But the new rule is now saying is that where the VAT is due on those expenses and it's not remitted to the relevant tax authority, so it's not remitted to Nigerian Revenue Service, that expense will not be tax deductible. And also where the VAT element on the fixed asset is not remitted, so the fixed asset will not qualify for capital expenditure. So someone also asked a question about the threshold for that. And from the document we have in FRS for now, the threshold for small companies is 50 million, subject to a total asset of not less than 250 million. So that's what we have currently. I also have another question on the implementation date. The implementation date, the commencement date is 1st January 2026. So someone is asking whether is it commencement, is it based on year of assessment or accounting year? It's based on accounting year because the transactions we start to all transactions within 1st January, going forward, will now be covered under the new Nigerian Tax Act and covered under the new Nigerian Tax Administration Act. So I just want to highlight some of those questions that have been raised from the chat. So over to you, sir. Thank you very much, the chairman of the session.
Thank you very much. Listening to you, there's still a lot of unpacking to be done. As the co-discussants have said, there is going to need to be a lot more discussion, a lot more education from the range of questions I've seen here. And due to time, as I've said, we're not going to be able to deal with each of the questions, but I'm going to give each of the discussants a minute to pick any particular ones they feel they want to answer. What I will say is stick with us, because the next session is going to have Mr. Taiwo Oyedele, who is going to set the scene for us in the next presentation. And thereafter, in the step-by-step breakdowns, we have a number of current and former chairmen of state boards of internal revenue alongside other professional colleagues who will be definitely bringing a state view. Some of these speakers I already know were part of the presidential committee, and so will give us additional insights. But we're not going to get all the answers in one session. I think Matthew has done extremely well, but I'm not going to give the vote of thanks. Our deputy registrar will do that. But let me now give, starting from the back forward, Professor Kennedy, you have 1 minute. I will cut your mic if you're more than a minute. And then Aziz, and then Temitope, please.
Okay, I want to respond to a question. Somebody asked here that IFRS says that VAT should be capitalized. So IFRS 16 and provides that the cost of qualifying capital expenditure, including purchase price, sales tax, shipping duty, installation, should be capitalized. But IFRS is not a tax rule. I want to let the person know that there's a difference between what is allowed in accounting based on accounting standard and what is allowed in taxation. There are certain things that are allowed in accounting, but there are certain things that such a thing may not be allowed in taxation. So what I'm trying to say here for my closing remark is that there's need for us to deepen knowledge of taxation. People should learn. People should involve themselves in every presentation being done by the Institute or elsewhere to ensure that we have this adequate knowledge of what the new tax laws is saying about, so that next year we'll be equipped to face the implementation. Thank you so much.
Thank you very much, Prof. Alhaji Aziz.
Okay, thanks very much, Mr. Chairman. I want our members to see this period as a very great opportunity to provide service to our various clients, and we shouldn't sit back. We should hit the nail when it's very hot now, read the law, be able to join various training sessions to understand it in depth so that our compliance will not attract penalties to ourselves and then our clients. Thank you very much, Mr. Chairman.
Thank you very much, Alhaji. And our partner, Titope, please.
So, thank you very much. Yes, thank you very much, the chairman of the session. The relevance of what we're doing here cannot be overemphasized. And the first thing that jumped at me was that these new tax laws are not given. They've taken some things also from us. A case in point is the investment allowance. So we all have templates for calculating income tax and on like that. So let's try as much as possible to update these templates and challenge. So I am actually currently expecting that there will be so many confirmation letters to the Federal Inland Revenue Service to start confirming certain things to taxpayers and tax consultants. And to the Federal Inland Revenue Service, when such letters come, now it may have come from company A or company B, it is good for you to pull all this together and kind of make them into a circular. It is still part of the education that we're talking about. Thank you very much.
Thank you indeed, my Dean. Thank you so much. There is so much more to do. I would thank our 17th president for the opportunity to chair this and ongoing sessions. I would like to thank all our presenter and our discussants, but I will now formally hand over to the Deputy Registrar of our great institute to do the formal closing points. Stay tuned, pay your dues, and engage fully. It's a very, very insightful journey we're embarking on. Thank you very much. Over to you, sirs.
Thank you very much, the chairman of session. Permit me, before I get the deputy registrar on, I'm sure we've all had a very quality time. That is what is we are known for in CITN. And to formally, give the vote of thanks to all the people that have made this a worthwhile session today, permit me to invite the Registrar Chief Executive, the first female registrar of our great institute, our own Mrs. Afolake Osho, as she gives the vote of thanks before we round up the session. Mrs. Afolake Osho, you have the floor, please.
Ladies and gentlemen, I will be standing in for the Registrar Chief Executive. It is both an honor and privilege to deliver the vote of thanks at the conclusion of this impactful seminar on the new tax laws. And the theme for today, from reform to reality, practical guidance for complying with Nigeria's new tax laws. On behalf of the entire Chartered Institute of Taxation of Nigeria, I wish to express our profound gratitude to the President of the Institute, Mr. Innocent Ohagwa, FCTI, for the unwavering leadership, vision, and support that has made this webinar series possible. We deeply appreciate all the council members I also recognize all the past presidents that are on call today. I saw Prince Quadri. We thank you so much. I also saw past President Adesina. We thank you so much for your presence. And also, I saw Prince Razak. They are all on the call. I recognize all of you, and I thank you for attending the seminar. We will continue this program as announced by the chairman on the 23rd of June, where we are going to bring on board the chairman of the Presidential Committee on Fiscal and Tax Reform. We are grateful to our presenters, the lead presenter, Mr. Matthew Osaneku, FCTI. Thank you very much for the insightful presentation. We also appreciate our discussants and panelists, including Mr. Temitokwe Samagbeyi, FCTI. We are grateful for your contribution. Also, to Alhaji Aziz Alatoye, thank you so much for your contribution. And to the Associate Professor, we thank you so much for your contribution, and we look forward to seeing you again, where you can address our participants.
Thank you.
All the presentations, I'm sure, they have been well articulated, and they have broken down some complexities of the Nigerian New Tax Act and provided some practical guidance for effective compliance. And to our participants, we look forward to having you again. As the coordinating dean has said earlier, this is just the 5th in the series of 14 series. And I'm sure that we are all looking forward to join us for the next edition. From all of us at the CITN, we all thank you, all the participants that have logged in from far and near. We look forward to seeing you and to engaging with you on this discussion. As it was said earlier, we need to continue to relate with the law, to read the law, and to familiarize with the law so that we can ensure that we are complying with the law. It is our hope that we meet you again for the upcoming series of these editions, and as it will help us to navigate the new tax structures more confidently and effectively. Once again, thank you all, and may we continue to work together in advancing tax professionalism and sound fiscal governance in Nigeria. Thank you, and God bless.
Thank you very much, the Deputy Registrar, Mr. Waid Ganiu, FCTI, for that vote of thanks. On this note, you have heard the few announcements I have for you. Is be on the lookout. This is the 5th out of the 14, as we've heard from the Dean of Taxation Faculty. Come on the 23rd, we will be hosting the chairman of the Presidential Task Force on the fiscal policy, Mr. Taiwo Yedele. Look out for all our social media handles for updates of activities that is actually going on our of your institute. You can visit our YouTube channel, the WhatsApp channel, the Instagram, the Facebook, the TikTok. There is always an activity for you to plug into. And we want to encourage you to make out time. The induction ceremony will be coming on in no distance time. This is the best time to invite someone to be part of this great institute, because this is the institute that makes things happen in terms of revenue generation, even for our nation, Nigeria. On that note, I want to extend my voice to say thank you for being part of this program this afternoon. Looking forward to you joining us in our next program. On that note, the technical team, can you give us the CITN anthem and the national anthem so that we officially bring this program to a close? Technical team.